Welcome to the Bill Walton Show, featuring conversations with leaders, entrepreneurs, artists, and thinkers. Fresh perspectives on money, culture, politics, and human flourishing. Interesting people, interesting things.
How many of us understand the healthcare system in America, and especially healthcare insurance? I know I don't. I have a lot of questions. How did the healthcare come to be 15% of the US economy, over $3 trillion? And why have healthcare costs soared higher and higher, more than inflation and average incomes? When did the market for healthcare services come unmoored from free markets and price competition? Why is healthcare insurance so different from every other kind of insurance? Is national healthcare insurance like Great Britain's inevitable, or are there free market ways out of our healthcare cost problems? And how did healthcare, according to some, become, quote, a universal human right when more than 90% of the medicine being practiced today did not exist in 1950? How do we deal with the terrible end-of-life healthcare questions and that there is no cure for old age itself? So when I came across some terrific explanations of how all this came to be, I knew I had to bring its author on the show, John Steele Gordon. John Steele Gordon is an editor at American Heritage, where he wrote the Business of America column. His books include one of the best books in American history I've ever read, An Empire of Wealth, an epic history of American economic power. John, welcome.
I'm very glad to be here.
Healthcare, you wrote a piece recently in Primus magazine for Hillsdale, and you gave, for me, an enormously helpful bit of context about just how far modern medicine has come over the last, I guess, couple millennia. And you make the point that I just made, that 90% of the medicine practiced today did not exist in 1950. Can you, I guess, for me, could bring me up to date of how where was healthcare for most of human existence, and how quickly did things accelerate through the last century or two?
Okay, well, rather a different line of work is often known as the oldest profession, but I think you can make a pretty good case that it's actually doctors are the oldest profession. I mean, herbal medicines have been known to all human societies, and then it was the Greeks who first figured out that disease is not caused by supernatural forces, it's caused by natural forces. Yeah. And they began systematizing medicine. A Greek physician named Galen in the 2nd century AD wrote enormously on the subject, and that became iconic in the Middle Ages. And so advance in medicine really stopped up until the 16th century, when they began to get much better idea of human anatomy. But even up until the early 19th century, there were very few things. There were a few drugs like digitalis and quinine. Mm-hmm. But other than that, there was not much they could do. It wasn't until the germ theory of disease was developed in the middle of the 19th century that it was germs that were responsible for many kinds of diseases that medicine really began to advance and became a modern scientific enterprise. And then around 1930, suddenly things began to explode in terms of what we were able to do. Because before then, basically what a doctor could do when you came down with a disease was he could ameliorate the symptoms, but it was basically up to you to either cure yourself or not cure yourself, as the case may be. But 1930, sulfa drugs, the first antibiotics, were introduced. And by the 1950s, surgery had greatly advanced. The heart-lung machine allowed chest surgery for the first time. And it just took off from there. Pharmaceuticals exploded with things like antihistamines and antibiotics and antipsychotics, which emptied mental hospitals all over the world. And it's been snowballed ever since. And it's just an amazing amount of advance. I mean, out of the 100 great advances of medicine, probably 80 or in the last 70 or 80 years.
Well, I think you point out in 1891, the death rate for American children in their first year of life was 125 per thousand. And that by 1925, it had been reduced to less than 16 per thousand. And that we saw a dramatic rise in the life expectancy of Americans just in the last 100 years.
Indeed. Well, at first, in 1947 was life expectancy. By the 1930s, 65 was life expectancy. Most of that was due to because of the decline in infant mortality. Much of that was due to pasteurization of milk. In the last 50 years, life expectancy has been increasing rapidly. It's now approaching 80 years. And most of that is because we are able to cure the diseases that used to kill us.
Now, all of these advances you talk about before 1950, and of course, one of my themes is the market is a wonderful innovation machine, and you let people find markets for their innovations, and good things happen. What drove the advances that occurred, during the formative time, say before 1950? Was everything pretty much a free market in healthcare then, and people paid for it out of their own pocket?
Yes, health insurance didn't exist until about 1930, there wasn't a whole lot that you could do with medicine in those days, so it wasn't all that expensive. We spent on average $23 per person per year on medical care in 1930. Today we spend something like $3,500. A curious thing happened was that health insurance was invented in the early 1930s, but it wasn't invented by insurance people. It was invented by doctors, because hospitals are very expensive, and the expenses continue whether there are patients there or not. And so they wanted a way to smooth out their cash flow. So Baylor Hospital in Dallas offered a group of teachers, if they paid $6 a year, I believe it was, they were entitled up to 21 days of hospital care.
Well, hospitals. The hospitals. There are only about a couple hundred hospitals in America towards the end of the 19th century, 1870, 1880,
Right.
And then they exploded. And I think you point out because of the germ theory and the fact that people could be safer in hospitals. Hospitals up to that point, before we understood more about how to treat illnesses, were places where poor people went to die. And if you wanted health care, you wanted medicine, it was performed, if you could afford it, it was by a doctor in your own house, or maybe at a clinic that he ran or she ran.
Correct.
It was all he.
And then, once we learned about antisepsis, then hospitals became places not only where you could cure disease, but also where you could research disease. Suddenly you had all these patients, and you could teach doctors how to, treat them and what have you. So they were an enormous force in moving medicine forward.
So we went from almost no hospitals to 7,000 hospitals in 1970.
Correct.
But the thing about hospitals that you've pointed out is that they're tremendously expensive ideas. I mean, you've got a building, fixed costs, you've got a lot of people that work in them, and the patients come and go. And in order to pay for the operation of the hospital, they had to figure out a better way to create steady cash flow.
Yes.
And so they didn't wait till people showed up to check in. They came up with this idea where you prepay, in effect, for healthcare. And that's really what launched the modern medical insurance industry. It was called Blue Cross in those days, Sacramento.
Right.
And then hospitals banded together and allowed this insurance to be, this prepaid healthcare to be used at all the hospitals that participated in the plan.
That's correct.
It worked?
But it wasn't, insurance traditionally is you had a deductible. Insurance was to protect yourself against unexpected, very large expenses, like, a tornado hits your house or your car is wrecked. That's what insurance was supposed to do. This early insurance was the other way around. They paid for the first 21 days of hospital care. After that, you were on your own. So it didn't really work terribly well as insurance. And then, unfortunately, politics got involved.
I'm just envisioning people trying to get well in the 19th, 18th, 19th day of their stay,
Exactly.
knowing they're going to be kicked out.
Well, 21 days was a long hospital stay even then. Hospital stays tend to be much shorter these days. And but also what happened was that it made you want to be treated in the hospital, the most expensive way to be treated, because that's when somebody else would pay for it. If you just went to the doctor.
So if you paid into this insurance plan, the only place you could get treatment was in a hospital. You couldn't go to the doctor and play it.
Right. And so that was a great incentive to go into the hospital, which of course is what the doctors had all along.
And the problem with that is that that's the most expensive way to treat healthcare. So we already launched into a system where you've got you don't have a market at work. You're just going to go to a hospital and no place else. When did the doctors come into the picture? Didn't they create their own insurance plan called Blue Shield?
Blue Shield, right?
Very similar.
Follow that in the 1930s as well.
So if you wanted health insurance, then you had either Blue Cross. You had Blue Cross or Blue Shield. Most likely you wanted both.
Correct.
And so what are the flaws in that system besides the fact you can only have treatment in a hospital?
Well, that was the main one, of course. And so what actually happened very soon is when the war broke out in 1941, suddenly we had a terrible labor shortage in this country. The unemployment rate in 1944 was something like half of 1%. And so companies were very anxious to get workers, but they couldn't raise wages because of the wage and price controls during the war. So what they started offering fringe benefits, one of which was medical insurance. And unfortunately, what this meant was that most workers by 1950, most people were getting their medical insurance through their employer, and therefore they had no choice but to take what he offered. And sometimes that wouldn't have been the best. You know, a young person needs a different kind of health insurance than an old person does, because as we get older, we need more and more medical care.
Well, most of the cost of medical care today goes into the last few years of life. I mean, isn't it something like half?
It's a third, I believe, something like a third in the last 6 months of life. Because sometimes what doctors were always trained to fight to keep people alive. Now, I mean, at old age, things begin to break down at some point. Just your whole systems are breaking down, and they can stop this thing, and then they stop that, and then they stop something else, and it can be enormously expensive, and the quality of life is often very poor. And we have to figure out how to do this in a moral way, and that takes theologians and ethicists, not historians, to figure that out.
And the thing about the healthcare insurance back in the day with hospital insurance was that the cost of treating either the birth of a baby or a back problem or whatever was roughly the same. So there was no catastrophically high numbers as we see today. I mean, my wife had back surgery, and it was a six-figure number. That and I used to be very free market. Gee, we shouldn't have Medicare, but now I'm on Medicare, and it's a pretty good program if you're on it.
Yes, I'm on Medicare. I heartily approve of it.
So how did the healthcare insurance ended up so different from other kinds of insurance? For the first place, most healthcare insurers are nonprofit, and
correct.
How did that come about?
Well, it was an agreement.
And also, they're not regulated by the state insurance regulators, which regulate every other kind of insurance.
Right. Well, the insurance regulators started moving to regulate them like regular insurance companies, which means you have to keep large financial reserves. And they didn't want to do that. And so they essentially made a deal that they'd accept anybody who applied, and they would operate as nonprofits.
So the quid pro quo to be not regulated as a insurance company by the state regulators with the IRS was that we're going to be nonprofit, and that was the trade. Was there anything else involved?
Oh, well, also that they would take anybody who applied, whereas insurance might not want to do that. So.
And so what happened was, as Blue Cross Blue Shield expanded in this form, it really other healthcare insurance companies were forced into the same model.
Correct, because there was no way to compete.
So how do we get cost controls into this system? It's one of the things that I think is concerning now is the way the healthcare insurance is set up, with the insurance provided by employers, and even in the government programs, Medicare, Medicaid, the VA. You really don't have any incentive to shop for price because it's all going to be paid. And then if you look at your statement, I mean, the retail price is some astronomically high number, and then what's really being paid is a vastly lower number. And so the typical person looking around to have something treated is not looking for cost savings, they're looking for something else.
No, one way that this insurance was different from ordinary insurance was that ordinary insurance, it indemnifies you against loss.
Mm-hmm.
So if your car is wrecked, the insurance company writes you a check, and then you decide how best to, go out and buy a new car or put the money in the bank and walk to work or whatever. In medical insurance, it's a fee for service. And so the doctors have no incentive to cut their costs in order to gain market share. And a great incentive to add $1 or $2, as long as everybody else is charging the same thing. So this is an engine of costs going up. It's a really dumb idea.
So the reason we don't have a price mechanism in healthcare, which is one of the questions I asked at the beginning, is the way the insurance system was set up back in the 30s, and the way it evolved with the IRS making these companies allowing them to operate as nonprofit, and getting out from under the state insurance regulators, where their cost of capital would have been a lot higher, and they would have had to compete more on price.
Yes, and that's the key to solving the cost of medicine is price competition. I mean, if the magic question is, doctor, how much is this going to cost? And under the current system, most of us just don't care. I mean, I had my gallbladder out 20 years ago, and I haven't the faintest idea what it cost because the insurance payer wrote the check. And now, of course, some medicine, if you're having a heart attack, you're not in a good position to bargain. But 85% of medicine is chronic care, not acute care. I mean, it's handling your bad back. It's handling, your overactive stomach or whatever.
Well, also, it doesn't cover routine things. It does, regular insurance, let's say auto insurance, doesn't pay for oil changes, doesn't pay for regular maintenance, whereas healthcare plans do.
Yes, and that is a very bad system, because basically it's not insurance at all, which protects you against unexpected loss. It's a prepayment plan, and a very expensive one, because the government in its infinite wisdom decided that car insurance should cover oil changes. So it used to be you go down to the garage, pay the guy $25 4 times a year, and he'd change your oil for $100. Now suddenly he bills the insurance company, but he has to wait for his money and has more clerical expenses, so he charges $35. And then the insurance company has to, they have clerical expenses and they need to make a profit and what have you, so they charge you $50. So now in your prepayment plan, you're paying $200 a year for oil changes instead of $100. It's exactly the same thing in medicine.
And what's been happening with the hospitals? Because this all started with the hospitals, but as I understand it, we had 7,000 or so in 1975, but that's fallen to about 5,500 today because our ability to treat things outside a hospital, treat illness outside a hospital has grown exponentially. And so the demand for hospital beds has been falling, yet it's very hard to get rid of hospitals or merge hospitals together. And consequently, the costs of being in a hospital have skyrocketed. What's keeping hospitals from going out of business or merging or working in a more economic fashion?
Anything is local pressure, unions. Everybody wants, efficient hospitals, but they want their hospital. But nobody wants their hospital to be closed. Doctors like empty beds because that makes it easy to admit patients. And so you have all this surplus capacity in hospitals, and they also the doctors want the hospital to treat everything, whereas it'd be much more efficient if we do have some specialty hospitals like Memorial Sloan Kettering in New York, which treats only cancer. But most hospitals are general hospitals, and they need to be more efficient and cut down. We could probably, cut down at least a third of all the hospital beds in the country if we could do it without, get the politics out of there.
And so it's just simply a matter of it turns up in the paper that XYZ hospital is closing, and the unions and the local politicians jump in, and you just can't do it.
Exactly.
Let's talk a little bit more about the employer paid system, because that's one of the problems, and that also employees don't have any incentive to shop for any other insurance, because if their company provides it, why bother? And then the insurance companies like the employee paid because they can cherry pick the kind of people they want to insure.
Exactly.
Word for that, a term for it. I can't remember I'm looking around here for what that is.
Community rating, it's called.
Community rating. That's what I was looking for. Community rating. So, how does community rating work?
Well, an insurance company, they look at a community and see how many. They're insuring automobiles. They want to know how many accidents this particular locality is likely to have. You're going to have more accidents in New York City than you're going to have in rural Iowa. And so people in New York City have higher insurance rates. But it's a big community, whereas you don't have to pay extra insurance because you happen to live on a block with a lot of lousy drivers. But when they're providing it to a company, they look for the company and they say, well, this company has a lot of healthy employees, doesn't have many problems. And so they cherry pick those, and then everybody left over has to pay much higher rates because of that.
And this is why 65% of workers without health insurance work for companies with 25 or fewer employees.
Exactly. So if you have one employee in that 25 employee company, one employee who needs considerable and expensive medical care, everybody else, their rates go way up.
Oh,
and also often you can't leave the company because you wouldn't be able to get insurance, which is just plain wrong.
Has Obamacare fixed this?
No, Obamacare has not fixed it. I personally think that Obamacare was designed to force the end of private medicine and to, make socialized medicine inevitable. I think it was. I don't have nice things to say about Obamacare.
Well, say a few unnice things then. What are tick off two or three of the particulars here?
Well, it was done without, economics had nothing to do with it. They did it. It doesn't change the basic fee for service system, which is part of the problem. It forces people you can still go out and get insurance. I mean, if your house burns down, you can't buy the insurance the next day. But if you have a heart attack, you can buy the insurance the next day. And that's just plain wrong. It sends up everybody's prices again.
So the two other programs that we talked about the Blue Cross Blue Shield. You want to Medicaid and Medicare. The healthcare providers hated these because they hated the idea of socialized medicine. But then when the programs kicked in the 60s and 70s, and particularly the 80s, they loved it because people could afford services they couldn't pay for in the private system, and it's been with us ever since. But what are so once again we've got more programs where we're not paying attention to what things cost.
Exactly. It doesn't, Medicare, you don't care what it costs. You just, the government takes the money every month out of your account. And also that's fee for service. It's again, the doctors have no incentive to compete in terms of price. And so they don't. And, the really big problem here is that every hospital has a list of what they charge, and it's a state secret. They will not tell you. Because basically what they do is they pay a lot less. Medicare and the big insurance companies have negotiated rates way down. So if you happen to be uninsured and you go to the hospital, you have to pay full freight, which again is just wrong. And actually the Trump administration has required hospitals and other medical service providers to post their prices. Mm-hmm. And then what they did was they would say, well, procedure PQ17H is $5,000. And of course, you don't know what the procedure is. So they have to put in a new rule saying in English, please. And there are hospitals now, and they're spreading. There are more of them. The Surgical Center of Oklahoma, for instance, they post their prices online, and it's a complete package. If you need a knee replacement, you will go online, and they'll tell you it's $15,607 or whatever the sum is. And that's it. Whereas in most hospitals, you can negotiate the price, and actually some people have begun doing that. They go to Oklahoma Surgical Center, find out what the price is, and then go to their local hospital and say, "Will you do it for the same price?" So they have these nominal prices, which are nonsense. If you look, when I get from Medicare, it says the doctor charged $150 for something or other. Medicare allowed $37, and the doctor took the $37. Well, he's obviously not losing money. So where does this $150 come from? It's a phony price. Everybody should have to post their prices, and then once you post prices, once hospital A says we'll do it for $15,000, then hospital B is not going to be able to charge, $25,000. Because people are going to go to hospital A, and the insurance companies are going to go to hospital A.
So there's no price transparency. Is there any quality transparency out there? One of the issues we have is that because of the litigation nightmare that most everything's become, but you've got tort lawyers going after people in malpractice. There's really no sharing of information about what worked and what doesn't work. And so if you're a consumer of healthcare, you not only don't see prices, you don't get quality ratings for doctors. I would love to see something where we had a Craigslist or something where people were posting up on the internet, well, this doctor's XYZ. Now, maybe that's starting to happen informally, but there's certainly no formal way to judge who's a good doctor and who's a bad doctor.
Well, hospitals, they do have morbidity tables and stuff like that, and they do keep very careful statistics. Some hospitals, of course, are simply better than others, and they have better results. They have fewer adverse results from appendectomies or whatever.
But how do we, as a potential appendectomy patient, I'll pick something else. As a potential knee replacement patient, how's that? Can pick and choose hospital. How do we know which one's better than the other except word of mouth?
Basically, it's word of mouth. And as far as I know, maybe there's an opportunity there for people to rate.
I think there's a big opportunity. Maybe you and I should talk about a business, because it seems to me that if you could pull together and systematize people's experiences. How many times we go out and people say, well, I had my knee done at this place and it was great. And somebody else says, well, I had my knee done same place, it was terrible. And so we have anecdotes, but we don't have analysis or statistics or ratings.
Right. Well, we've had the hospitals that have to be forced to provide those statistics. And the American Hospital Association would fight that tooth and nail, I am sure.
Well, and they also are worried about the litigation explosion, which you've written about.
Indeed. Tort lawyers, we have, in the United States, is the only country in the common law world where we have what's called the American rule, where both sides pay their legal expenses regardless of outcome. Everywhere else, it's the English rule, which is the loser pays the outcome, which makes people much more reluctant to sue. And basically, this is an opportunity for lawyers to extort. I mean, they go to you and say, look, you know, we're suing you for $100,000 and we have enough evidence to get into court, but we might lose. But anyway, you're going to have to pay $100,000 to your lawyer, pay us $25,000 to go away. And this is a plain old extortion. And tort lawyers are, they're parasites. They contribute, they create no wealth. They simply transfer wealth from one person to another and take a big chunk of it for themselves. It's a dreadful system. Unfortunately, tort lawyers are the second largest donators to the Democratic Party after labor unions.
So labor unions are one, tort lawyers are two. Yeah, I get neurosurgeons, pay as much as $300,000 a year for insurance coverage?
Indeed, it's just hugely.
Even good ones.
Because they're, you know, some specialties are much more high risk than others. And, you know, it's a ridiculous way to go into court. And they're very careful on the juries to make sure there's nobody on that jury who actually knows anything about medicine. And so it really boils down to the histrionic talents of the lawyers who are arguing.
Yeah.
And you know, I would like to see courts that do nothing but malpractice courts, that they have judges who are specially trained in medicine, and it is the judge that calls the expert witnesses, not the lawyers, because there are plenty of expert witnesses who will testify in court that, yes, you know, they'll tell you, you know, unless the lawyer says, well, what are you going to say? And unless the guy says what he wants to hear, he doesn't get hired as an expert witness. So it should be the judges who do it.
So I'm hearing a couple solutions if we could bring about. One is experts in the courtrooms who know medicine and know healthcare, who can really assess what was a good thing or bad thing. I'm also hearing loser pays is a great system. The English system, which would reduce tort reform. What did Texas do in their tort reform? Was it something similar to that?
Well, it wasn't loser pay.
Texas has seen these costs drop exponentially.
Loser pay, but they did reform the system. You're not allowed to judge shop anymore in Texas. I forget the particulars, but Texas did do a very good job of reforming malpractice.
So in the realm of solutions, why people are pushing, you mentioned, and the left is pushing for national health care insurance, but you say we've already tried that here. We've got three systems we've tried that in.
Right. We have Medicare, we have the Veterans Administration, and we have the Indian Health Service. And all three of them are shambles. I mean, none of them, as a private insurance company, would survive a week. They're just very, very badly and inefficiently run. And, you know, why should we turn over all of medical care to the government when the government has been unable to run three separate medical care systems? It just doesn't make any sense.
So instead, we go back to my favorite solution, the free market, and that involves price transparency?
Absolutely. Prices have to be, you know, your local gas station has to post the price. Why shouldn't the local hospital post the price? And the real price, not the nominal price.
So then if they have that, then they're going to force to compete on price. Now, people will say, gee, if you force them to compete on price, they're going to cut the quality of their health care, and they're going to try to complete surgeries quicker or with less care. How do you respond to that?
Well, right now there is so much inefficiency in hospitals because there's no incentive to become efficient, that there's all kinds of low-hanging fruit. And that hospitals could use to cut their costs. And I just don't think one day if they did that, then they'd be subject to being sued for malpractice if they cut corners that, you know, diminish success rate, things like that.
Well, sued, or else the solution that you and I came up with a little bit ago, which is that I think if you had price transparency coupled with a robust ranking system or rating system, a community rating system, driven by both patients and by doctors and people in the field, so that if a hospital or a doctor got a reputation for low prices, but also low quality, that word would get around. And
Indeed,
so
it would very quickly.
You wouldn't be looking just at price. You'd be looking at how likely it was you'd actually get your knee fixed.
Yes, exactly. And that's transparency is always a good idea. I think it was Louis Brandeis, of Justice Brandeis, who said that sunshine is the best disinfectant.
He did, and he was right.
He was right.
So we're going to go, okay, so that's one solution. And then we got the American rule. We've got patient shopping, and you would also reform the federal programs, what they would pay. So the Medicare would not be generously paying every single hangnail that we have, but it would be more selective about what it would pay for.
Exactly. What a medical savings account is what
Okay.
some companies have done this, and there's no reason Medicare couldn't do exactly the same thing, which is that they provide a certain sum of money to handle routine care, scraped knees and the sniffles and what have you. And then in fact, major medical to cover the heart attacks and knee replacements and what have you. And then if you don't spend that money, you don't have any sniffles that year, that money would go over into your retirement account. This would give everybody the incentive to ask the magic question: how much is this going to cost?
So we've come up with some good ideas: price competition, a robust rating system, quality rating system, loser pays, litigation, healthcare savings accounts. But we touched on this earlier, and I want to close with your thoughts about how we deal with the fact that a lot of the money that gets spent on medicine falls into two categories. One, diseases like heart disease and diabetes, which some people feel are lifestyle related diseases. And then the other big bucket of where money gets spent is in old age, primarily the last year or two or three of life. And we're able to prolong life. We can prolong life for almost forever. I won't say forever, but for a decade or 2 decades when somebody has something in their 70s or 80s. How do you deal with those ethical questions? And I don't expect a short answer or a definitive answer, but that is the question.
That is
to be or not to be.
Is how do we decide when to allow somebody to die? Because they're dying of old age, and old age is an incurable disease. I wish it were otherwise, but it's not.
I'm getting there on that one too.
Yeah. And so that's a problem for ethicists and theologians and people like that. And that's not my job title, I'm afraid.
But it is something as a society we're going to have to grapple with, because our ability to keep people alive vastly exceeds our ability to understand what the right thing to do is.
Right. And also we can keep them alive in a technical sense, but they're lying in a bed with tubes running in and out of them, and there's no quality of life whatsoever. So I think, I don't know what the solution here is, but we're going to have to think long and hard on that, because our technical ability keeps, bounding ahead. And it's still, and also just think how much life expectancy has increased. I mean, when I was a child in the 1950s, I knew a woman who would live to be 107. Nobody else knew people that old. Now, Queen Mother, Madam Chiang Kai-shek, Rose Kennedy, on and on have lived. Bob Hope, they all live. Kirk Douglas is 102 and doing just fine. Olivia de Havilland, who starred in the movie 1939, she's still alive. And so these very long lives, and if it's a good quality of life, that's terrific. But if it isn't, then I think we need to think about it.
Well, let's think about it. John, thank you. Thank you for a lot of fascinating insights in the history about how we ended up where we are. Your piece appeared in Primus magazine, Hillsdale, and that can be found online?
Indeed it can. You can just Google on Primus Hillsdale, it'll come up instantly.
Yeah, Primus Hillsdale, hillsdale.org. Highly encourage you to read it, because it fills out some of the details that we've been talking about today, and is the best overview of both the history and the nature of the problems we face in healthcare that I've come across. So, John, thank you, and and look forward to having you back on to talk about, maybe we'll talk about the economic history of the United States next time.
Okay, I'd be happy to do that.
Empire of Wealth.
Thanks for listening. Want more? Be sure to subscribe at thebillwaltonshow.com or on iTunes.